What up, though? It's your boy Lando Success. We got a good one, Yo, crypto guy in the building. What's poppin'?
Won't you give me the rundown? Let me know how to love now.
What's going on? Salute to you, my G. Hope all is well. Jimmy, you know it's FMOC meeting. I gotta get at the meetings to know exactly what's going on.
Find out just how I like it, yeah. When do you think we can
What up, though, Chris? What's going on, player?
I don't need a quick fling, I need the real thing. If you ain't, leave me alone, no. I ain't gonna front you with my good
man, what y'all want to talk about today? We have a whole hour. So I believe at 2 p.m. we will get the numbers and we will cover the numbers. Starting at 2:30, everything will be live. B. John, what's going on, brother? Hope all is well. What's going on with you?
Only bullets gonna come from Cupid, girl. And you can ask some niggas if they stupid, girl. Give me the rundown. Let me know how to love now. Let me know how to trust you. Show me nothing else but you. Won't you come back to my crib?
Hit that like button, hit that subscribe button.
Tell a secret on
help
my
out the YouTube algorithm.
Like it. Yeah.
How y'all doing today?
Let me know how to love now. Let me know how
we got the meeting popping off
nothing else but you. Won't you come back to
at
my
2:30 p.m. Eastern Standard Time.
Find out just how I like it, yeah. Girl, you know I rock the boat, baby. Bills paid, I'm responsible, baby.
Get everything set up because we're gonna have to talk a little bit about everything. 3 likes at once. Shout out to those likes who just did it.
Baby, we'll be somewhere tropical, baby. Playing so diabolical, baby. Oh, fatty on the island, fist full of diamonds. Never met a nigga this
silent. Down, pimp is up. I finally sold my house.
Baby, I got it. Fuck being modest. They only wanna wipe that cook. They only wanna wipe that clean. I only wanna wipe like you. Thick brown skin, real me, that only give it up for me. Won't so give me the rundown. Let me know how to love now.
All right. Good afternoon, beautiful people. It's your boy Lando Success. Hope all is well. Not a financial advisor. I'm just a black brother giving y'all some game. We talk different things, finance, crypto, all type of fun stuff, life, sports, whatever y'all want to talk about. But today, we are primarily angling this one with this FMOC meeting happening at 2:30. We have crazy drama going on coming in, talking about the rate hikes that they have coming up today. And the market was scared, talking about they're going to crash. We're going to talk about that. Usually the general rule of thumb, when we are live, we need to keep the lights at 50%, meaning if we have 100 people in here, we need 50 likes. We got 1,000 people in here, we need 500. We got 1 million people in here, we need 500,000 likes. If not,
oh my God, they took my...
What you say?
I'm gonna say some bad things like this.
I said whoever threw that paper, your mom's a hoe.
But y'all don't want me to do anything like that. So we let's pay some bills. So we had to pay some bills first. Oh man, I haven't been live in so long. So the first is, see if I can send it to myself real quick, is with Moomoo. They are doing 15% free stocks. I'm not even going to try to send this to myself right now. But Moomoo right now is doing 15 free stocks. My manager just emailed it to me recently, and they have it set up this month. I don't want to paraphrase. I'm not even going to say it. Just sign up, get you some free stocks. Let's see if they have it up to date, because Moomoo, they switch up promotions like every 15 days. I like they switched up the like the website, getting it popping. See, here we go. Get up to 15 free stocks valued up to $2,000 each. Learn more. Bam. Open an account. You're going to get 1 free stock. Once you deposit $100, you're going to get 5 free stocks total. So you're going to get a total 4 right here, 1 right here, total 5. And if you deposit $2,000, you're going to get a value of 15 stocks total. So they give you 10. So it's 10, 4, and 1. Also, let's see, Seeking Alpha. I haven't did no shout out to Seeking Alpha. They pay a brother well. Let's do Seeking Alpha. I love Seeking Alpha because what they do is, if you want to understand the analytics, the numbers, like if you want to do a breakdown, you want to go to Apple, you want to see what the top analysts are saying, giving their opinions, their thoughts, talking about the financials, earnings. You can do that with Seeking Alpha under my link. I believe right now they're giving it to you for $100 for the whole year. So that's definitely great. Shout out to everybody that's in here. I shouldn't have ate before I came on here because I'm all stuffed and bloated, but we're gonna get everything right. So good news, I finally yesterday sold my damn house. Drop exclusive bomb for myself. Man, it's been a crazy process. Y'all know I'm gonna drop some videos breaking down the process of exactly what happened, how I did. I know everybody want to know about the money. How much money did you make? So we're going to talk about the money, but since I'm going to do that, might as well monetize it. It was very, very smooth. The house inspection, that was the main thing I was worried about. That went through clean as hell. The appraiser went through clean as hell. Everything just went perfect until the last 2 weeks. What could go wrong did go wrong every single day for about 2 to 3 weeks straight. Literally, you wake up, whatever you possibly can expect to go wrong outside of somebody dying. The city want to do 3 more different inspections. $750 for this furnace. $300 for this. So-and-so for this. And it's in the process of moving in. So that process went crazy. I'm just happy for it to finally be over. I can start back actively investing and get going hard on crypto and stocks. So all my Patreon members, is going to benefit you the most, because if you're in a Patreon, what I'm going to be doing is, like, say for example, I wake up today, if I wanted some Ford stock since it's crashing and all that type of stuff. If I buy some, I'm about to buy 3 stocks. I'm letting the Patreon members know first. Yo, this is what I bought. This is why I bought it. Simple, quick, before I do a video or choose to do a video. They get the inside info first. So if you're interested in a Patreon, link is in the bio. You can sign up. It's $20 a month, but the value I'm going to be giving is going to be worth a lot more than that. And the goal is to finally get a full Bitcoin. I originally said at the beginning of this year, I want 1 full Bitcoin by the end of this year. And I wanted to put a buy-in, what you call an order, on, well, I can't talk about it yet, because basically I signed a deal with crypto.com. They're trying to get things together. I can't even talk, but just know I signed a deal with crypto.com, so I'm going to do everything through them. So I want to get 1 full Bitcoin. My price was to get it under 19,000, because crypto is going to explode next month. My opinion is going to explode next month. It's probably going to explode before. It's probably starting today. So I wanted to get under 19,000. Anything under that is perfect. So, hopefully as long as it's under 20, but I really want 19,000. We will see. All right. Hello, mate. Where you from, man? Let's go, dude. We got my Australia. I got a lot of a big supporters from Australia. Shout out to my Australian subscribers. Wrong button, but y'all get the thing. What's your thoughts on ApeCoin? I am fully bullish on ApeCoin now. ApeCoin, it took them a while to grow on me. Really took ApeCoin a while to grow on me, because coming into this industry new, and you're like borderline meme coin, gaming coin, NFT coin, it's like, man, you got a higher chance to fail than succeed long term. So I didn't know who was running the project. Once I learned who was running the project, watched the full interview of exactly what they're doing, I fell completely in love. I'm fully bullish on ApeCoin. That is probably going to be one of my top 10 positions in the future, hopefully sooner than later. Definitely bullish on them. I definitely want to buy a Bored Ape, so I'm going to probably use that with their money, be able to do it. But I love ApeCoin as of right now. Definitely is a great long-term buy from what I have seen, which research I have done. So let's talk about a few things in the market so I can clip these up for other videos so y'all can ask questions. I'm about to try to zone out. I wanted to prep all of this, but I was doing so much house stuff. The ADT guy came over for security stuff. And then it's just so much, man, moving into a new house. Like, if y'all can see my garage right now, like because I'm in a studio. I get one of my studios in my garage. And it's like, it looked like a tornado in here because we can't move everything in until we get our carpet, paint, and all that stuff. So it's crazy. So let's get started with cryptocurrency. There's a big attack on cryptocurrency right now that I knew that it was happening for the last few months, but everybody got quiet. And the reason everybody got quiet, and I'm saying everybody such as government, big money people, regulation, SEC, they got quiet because they was writing some shit up. They was basically like, look, we about to put some bans. We about to put cases on all you cryptos. And I seen a few things. So I seen this article yesterday. The U.S. government may ban algorithmic stablecoins. Just off of seeing this, I told everybody exactly what was going to happen. That's why I was like, look, the ripple effect of Terra Luna crashing is so much worse than what everybody thinks. If my followers been seeing it, I did that video breaking down why it was so important that this was so bad for crypto as a whole. I said because what's going to happen is the government, the big money, is going to say, hey, we told you guys, y'all see what Terra Luna did over here, lost all you guys some money. And since they lost all you guys some money, they're going to make it a SEC type of thing. That's why they want it to be a securities, to say, yo, that's against the law. We can't do that. Y'all need to come to death row. And we got this stable coin over here. And we're going to attach this with Bank of America, Chase Bank, and all this type of stuff so they can get in. Y'all want to send crypto, send it through us so it can be regulated and we can see what's going on. Exactly what I said. So this is my first time ever reading this article. I just seen it. I'm like, all right, let's talk about it live. This year, the entire world witnessed stablecoins steering away from their association with the word stable. Sadly, the entire crypto market had to bear the burn, ticked off by Terra, algorithmic stablecoin UST, and array of stablecoins were seen temporarily losing their peg. While governments across the globe are keeping an eye, the U.S. government seemed to be limited its purview to algorithmic stablecoins. According to a recent draft bill, the U.S. government's note that the creation of insurance of, endogenously collateralized stablecoin would be illegal. So, exactly what I just said. Without even reading this article, I already know what's going on. Now, algorithmic stablecoins worked until it didn't. It's like, we didn't know that a stable coin could get depegged because we didn't understand fully how an algorithmic stable coin. So I am actually with them on, yes, we need a stable coin, but we don't need this type of stable coin because I lost money. Some of you lost money. A lot of people in the world lost money. So it needs to be done better. So I'm with that. The next thing I seen is Tether agrees to produce court request UST banking documents. Actually, it should be the request article, because usually if I see this on Watcher Guru, see if I can find the original one. Just in, okay. Just in, New York judge ordered Tether to provide financial records related to UST banking. Wow. So they like, look, y'all supposed to be algorithmic and y'all supposed to be doing all of this. Let's confirm that y'all are doing what y'all saying y'all doing, right? Despite and telling the title of the world's largest stablecoin, Tether computed, okay. It was brought to light that a U.S. judge in New York dismissed Tether motion that blocked the release of financial records. Therefore, the network now has to produce an array of documents pertaining to the backing of the UST. This list includes general ledgers, balance sheets, income statements, cash flow statements, and profit and loss statements. In addition to this, a stable firm has to present records of any transfers of crypto or other stablecoins. Minor details at the time of the transactions were also demanded. Now, I'm not mad at this. I agree, because these stablecoins are ran by somebody. That's why I was kind of for algorithmic stablecoins, because it wasn't like, I still believe you need a decentralized stablecoin where somebody is not technically running it. I don't know. I'm not smart enough to figure out how to solve that and figure it out. But we need to know what y'all doing with this money. When it comes to money, I don't trust the government. I don't trust Uncle Sam. I don't trust nobody what they say when it comes down to money, unless you got receipts. You got receipts. Lando, if you say you did something, blah, 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 I always have, I'm a receipt person. Anything somebody try to come at me with, I always get receipts. We don't have to argue about your opinion. Let's talk about the facts. That's where I'm at sometimes with that. So let me know y'all thoughts in the comments about them coming down heavy on cryptocurrency, because that can be a ripple effect, and that actually can affect, let's see if this news affected the price of Terra Luna, because I haven't looked at anything so far today. Crypto is up. Let's see. Terra, you disappeared, Luna. Let's see how they did the price. It's down 2%. So it didn't like it. Let's see the other Luna. Classic. And it's down. So both of it, news didn't, it definitely didn't help them. Shout out to everybody that's new in here. If you haven't already, hit that like button, hit that good old subscribe button. That's why I'm going to push that back so I'll be able to sit back. It feels good to do a video and be able to sit back, but my microphone, the way I get it, I can't do it all the way, because sitting up like this, that freaking hurt your back. And I'm definitely investing. And it's called, anybody hip to, it's called autonomous desk and autonomous chair. So the desk is like where the table rises, where you can stand up and stuff. I'm doing that for my library studio. I'm getting that desk. That will be dope. And the chair, I heard, is amazing. So I'm about to be bougie as hell. Like when I tell you I'm upgrading the equipment heavy, we upgrading heavy. God Unchained token is very low on radars. Not on mine. I did a video about God's Unchained. Let's see. When did a player... I've been hip to God's Unchained. It's actually my favorite play to earn game, because when I did a video about it, I downloaded myself. I downloaded it myself and I played it, and it's actually something that I genuinely will play. God's Unchained, I did that in December, almost a year ago. I did a video breaking down God's Unchained. Freaking loved it. So if you guys see, that's me playing it right there. Great great game, great concept. I love the people that they have recruited to build it. So I said all of this stuff, red shirt, said all of this stuff months ago, almost a year ago, breaking down with God's Unchained. I'm a believer. I don't know if I still have any money. I did have money invested with them. Probably sold it a while back. I'm going to probably get back in. I don't like to get back in on the hype and all of that stuff. but I would have to probably build a position. But yeah, I'm really a supporter of them. Let's see what their price is at. But yeah, while a lot of these play to earn games, because my thing is, I understand the gaming community enough where the gaming community, it's like three ways. You're gonna do the Grand Theft Auto trend. You're gonna go to that route and you're gonna play the Grand Theft Auto. You're gonna do you're gonna play the shooting game, the Call of Duty, or you're gonna do like the card playing stuff. And the nerd stuff is usually the best because their community is the most consistent. Like being able to play with them cards, and it's simple. I don't never play that, and I understood exactly what to do and how to do it. So if I was a nerd that liked to do it, I would easily do it. So Gods Unchained price right now is at 41 cents. And when I did that close to a year ago, it was up high. It was December when I did that video. So I probably did it right around their time. It was at $7 or whatever it is. So I assumed where everything was crashing down. So I probably sold, I don't remember, I probably sold like right here. So I saved some money from not holding on for a year. But yeah, look, in the last week it's up 21%. Last month up 2%. And it's boosting up like that for a reason. Coin circulation is good. 77 million. I like it. The volume at 18 million. For a play to earn game, this is a great volume. Anything go, I like 25 million or higher. Market cap 31 million. But it's a newer game, so it's definitely a good one. So everybody that's new in here, hit that good old like button. The goal is in 4 minutes, we are going to receive documentation and information about what Fed rate the numbers, basically what the Fed is going to do, such as raising rates and stuff. So this is the deal. How should I start it? So originally, we were hoping, and I'm saying we as the community, people in general, analysis, financial people, we were hoping that Jerome Powell finally took his foot off the pedal of raising inflation. 75 basis points has been high as hell. And we like, man, once he finally lowered from 75 points to 50, City Boys is lit. We up. We good. And then the market was just going to skyrocket. It was going to go good. So I'm like, look, 50, we going up. 75, we're going down. Then a wrench got thrown into everything. And basically it's like, okay, it's a possibility that we can raise it to 100. So now you got all of these articles. So it's like shit. So everybody like, oh man, market crashing, 100 all the way up here. Now, what is going to happen? I did a video at midnight last night. I told everybody the market was going to be green today because I looked at my whole feed. Everybody, shocked face, red thumbnail, burn, burn, burn. Everything is crashing. Interest rates, housing market, everything is going crazy, right? I was like, the market going to do good tomorrow. The reason why I predicted the market was going to do good today is because the market don't like everybody thinking they're right. 99.9% of everybody was like, man, everything is going to hell. Everything is crashing. I'm like, the market is going to do the exact opposite tomorrow. So I'm the only person I've seen that said, oh, we're going to have a good, it's going to be good. And a reason I'm believing it's going to be good. So remember, 100 basis points, everybody is scared. So if we go from 50, 75 to 100, and we go back down to 75, which everybody knows is going to be today, we already expected it. So the market is not about to just crash, in my opinion, based up on that information. Once they tell us 75, okay, what happened next? Let's go to the bad. So worst case scenario, you're going to have house and interest rates going to keep on going up, which it's been doing. Shit, I seen the national average at 6.33%. So we'll just go up to 6.5. Keep on going up. So it's like, all right, we got that. You know, we got food price. To be honest, the average person, all we give a damn about mainly right now is gas. If gas prices is high, we are pissed the hell off. That's it. If gas price is low, we'd be calm. If it's in the middle, we'll talk low shit just a little bit, but that's all we really care. Food prices, we got to eat any damn way. Clothes, people don't care. You can stop on that, We don't really care. So, shout out to everybody that's in here. So, they about to come out with the numbers at 2. So, hopefully in 1 minute, we're going to look at the numbers, see what they say. Then, Jerome Powell going to take 30 minutes to debrief. Hopefully, my camera don't die. If it do die, we just going to be on some hood stuff. And I'm going to get my Skyping camera. And I'll switch it out. I'll figure it out. But, we family. We gonna figure it out. We gonna make it work. Then Jerome Powell gonna figure out his thing. What the hell he gonna say? He finally started to turn up and be a little bit gangster lately, because the first meetings I start covering on this channel, my complaint was, bro, rip off the Band-Aid and stop sugarcoating shit. You just sugarcoating everything. You're not keeping it 100 and telling us what the deal is. We know everything going to hell. We see all the numbers. Everything's going to hell, right? So stop peeing on us and telling us it's rain. So the last meeting or so, he finally ripped off the Band-Aid. He came out, Tupac Biggie diss. In the click, you claim to be a player. Like he came out like, oh, and everybody like, oh, okay, about time you got a little bit of gangster in you. So we got Navarro in the building. What's going on, dog? Did my girl drop that baby yet? Did my girl drop that baby yet? That's what the people want to know. Is that baby out? Happy belated to a player. Market will so today the market will drop, or that baby will drop from wifey's belly. That's what we want to know, man. One of the two is gonna drop. Look, if y'all still haven't figured out a name, I have the perfect name for the baby. Orlando. Stay woke. I'm just saying. Sound like a perfect name to me. Perfect name. Bearded Mac in the building. What's going on, dog? He entered the chat. What's going on? Okay, so we shall finally have the numbers. So this is how you do it. Let's go. I got 50 things open up. Let's go to Twitter. See if we got some numbers we can read live. We go to the Federal. Let's go right to the main people. Federal Reserve. Give me my numbers. 35 seconds. Damn, I'm good. Okay. Oh, shit. Calm down. Federal Reserve Board, blah, blah, blah. Statement. Lego. Where is my PDF? All right. Recent indicators point to the modest growth in spending and production. Job gains has been robust in recent months, and the unemployment rate has remained low. They love to talk about the unemployment rate. Inflation remained elevated, reflecting supply and demand imbalances related to the pandemic. Gotta blame the pandemic, higher food and energy price, and broader price pressure. Is causing tremendous human and economic hardship. The WAR and related events are creating additional upward pressure on inflation and are weighing in on global and economic activity. So that means Jerome Powell is going to come out originally and just say and do the blame game. Hey guys, we do got the WAR still going. We do have the pandemic technically still going, but look at jobs. Jobs are great, so that's what he's going to say. All right, the committee is highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at a 2% overall the longer run. Good luck with that. In support of these goals, the committee decided to raise the target range of the federal rate 3 to 3.4%. Anticipated the ongoing increase in the target range will be appropriate. In addition, the committee will continue reducing its holdings, blah, blah, blah. Rate 3. Okay. And okay. Whole bunch of nothing right there. So that's basically the opening of what they're saying. All right, summary projections. Let's see. Breaking news of a percentage. Yeah, so they did exactly what we predicted them to do. All right. Let's see. Change in real GDP. The median, what they got right now. Don't worry about what I'm doing right now. I'm just scamming, looking at some numbers. Change in real GDP. Median. Inflation. Okay, everything high as hell. Participate. Monetary policy. Midpoint. Thanks for the like, whoever just did it. All right. So, first, let's hear from the experts, because they did exactly what we said they were going to do. And the market, how right now, is reacting very, very bad right now. Initially, bam, we got the initial crash. We got the initial, okay, they raised it and we crashed soon as they raised it. So we got the initial crash going on completely right now. What did I say yesterday? The initial, when it happened, is going to probably crash 100 to 300 points. I believe 250 points, in my personal opinion, but it's going to start tickering back up. So let's see. So right now, everything I said, we was going to open up in the green. We did. It was going to crash once the news happened. It did. And I'm projecting that it's going to go back up. That's a big mother-loving crash, dog. How many points is that? Fed rate raises rates by another 0.75 percentage point to high inflation. The Federal Reserve on Wednesday raised the benchmark interest rates by another 0.75 percentage point and indicate if they are keeping the hikes, blah, blah, blah. It's in a quest to bring down inflation. Along with massive interest rates, Fed officials signal intentions, continue fights. Okay. And I want to look at some stocks. I'm looking at it on Moomoo, because Moomoo give you more advanced trader vibes. Congrats. Oh, I got a free stock of Coinbase. Thank you, Moomoo. Drop an exclusive bomb for Moomoo. Gave a brother a free stock. Haha. See, you got to get y'all free stocks, man, with Moomoo. Give me a Coinbase, baby. Coinbase, baby. All right, so let's see who's okay, hold on. Let's first start with the good. The only good right now is Ford Motor Company, and Ford Motor Company got their asses handed to them badly yesterday. Biggest drop since like 2008. I believe it is a real big drop. I got notifications going off crazy. Robinhood is in the green. Roblox, Coinbase is in the green. Coinbase is definitely about to be in the red by the time I get finished saying red. All right, let's see. Now, XP is getting whooped on. Oh, no, XP. What is going on? Player, why is y'all getting whooped on like this? Shoo, they must have some crazy earnings or something. So XP don't like what's going on. Neo, they getting whooped on. Moomoo is getting whooped on. United Airlines, all the airlines was up yesterday. AMC, Amazon is back under $120. You got Netflix in the red. Starbucks was doing good for a few days. Nike is in the red. Apple. Tesla is still hanging in strong. Tesla's still over $300. So with all this going on, Tesla is really just is keeping it P. Tesla is pimping easy right now. Shout out to all my Tesla holders. Fed meeting. Come on, refresh. Fed raised rates by another 0.75. All right, so I'm going to read some of the comments because we got 21 minutes before Jerome Powell goes live. Hit that like button, hit that subscribe button. That help out the YouTube algorithm. Soon, your boy will finally be going full-time on YouTube. Well, I'm already technically full-time. But since I got this damn boot on my foot, I can't go out and go drive long distance. So I'm like, let's just invest money into a studio being here. And I also have another channel, Top Sports Debate. If you guys are sports people that like sports, I'm like, look, sometimes I don't want to talk about finance. I talk about sports. And I'm a big sports bettor, and I make more money than I lose money when I bet. So I tell people every week which bets I'm doing. And if you've been following this channel, you would have been making money. So we just launched it. Let's get this up to, shit, what'd I do? Let's get this up to 50 right now. 50 subscribers. Let's go ahead and get it up. Top Sports Debate. Type it in. Go ahead, do that, and come back to a player. Or I will have it pinged to the top. Let's see. The Fed forecast rates high. Okay. All right, I'm getting some good notifications. Let's see. Good notifications. Okay. Why do they not let me airdrop it? Some things they let me airdrop. CNBC. Read some of the comments real quick. 75 points coming. You know it was. I think the market will rally after this. Tomorrow will be a different story. They won't announce recession probably till election next year. Yeah, they're just stupid at this point. Keep on saying, it's not a recession, whatever. Market dumping already. Yes, it is right now. Still making Yieldy Man. Always talking about that drip. Shout out to Yieldy Man. He consistent. Dump. I need Bitcoin to dump because I want to get me one Bitcoin under 19,000. That would be dope to do a live video purchasing Bitcoin because you don't never see nobody buy a Bitcoin. That would be a good video to do. Me buying a Bitcoin, I think that'd get a bunch of views. I'm rich, bitch. I'm catching the fall. Who's with me? Yep, I'm definitely with you, dog. I'm definitely with you. Tesla is a good company to work for. Just they give employees $6,000 in stocks, and you can also get 15%. That's a game changer. I would love to work with Tesla. I just wish I was nerd smart enough where I can just be a contractor, a freelancer. Like, hey man, just pay a player in Tesla stock. Just give me some shares. What y'all need done? I can do some film and production. I can go do some interviews. I can holler at good old Elon Musk. Let's see. U.S. Treasury yields top 4%, the first time since 2007. Oh, where my no? Oh, no. There we go. Oh no, the yield on a two-year Treasury note top 4% for the first time since 2007. On Wednesday, as traders bet the Federal Reserve has much further to go in raising rates to fight inflation. The policy sensitive two-year Treasury rose 15 basis points to 4.0 to a level not seen since October 2007. Meanwhile, the yield on the benchmark 10-year Treasury was last so roughly up 4 points. The significant inversion with the short term. Man. Yeah, talking about we ain't in no recession. We are definitely in a recession, dog. Look at this two-year hit highest since 2007. Look at this. We haven't seen this. Wow, man. We seen this 2018 when it was that high. Wow. That chart is insane, man. This economy is going to hell. So, would y'all, to be honest, so with the economy going to hell, do y'all blame Biden since he is the primary current president and a person appointed, Or do you blame Trump because he was a previous president to put us in his position? Because Trump gave us a bunch of money. He like, look, here's what changed and new. He like, look, YOLO, let's go ahead and get this money. Boom, boom, PPP loans, business loans, more money everywhere. We balling out. But, and now you get the president in, and I think it's a ripple effect of both. I will say 60% Trump, 40% Biden, because Biden don't know what the hell he's doing. Did y'all see that reel I posted on my channel? This shit is hilarious. Watch this. I'm sorry, you guys that don't like politics. Y'all will be okay. Get over it. This is hilarious. Like, buddy don't like this. My uncle don't know what the hell is going on. Watch this, y'all.
Dived. People are shocked by their grocery bills. What can you do better and faster?
Well, first of all, let's put this in perspective. Inflation rate month to month was just an inch, hardly at all.
You're not arguing that 8.3 is good news.
No, I'm not saying it's good news, but it was 8.2 or 8.2 before. I mean, it's not. I can make it sound like all of a sudden, my God, it went to 8.2%. It's
the highest inflation rate, Mr. President, in 40 years.
I got that, but guess what we are? We're in a position where, for the last several months, it hasn't spiked. It has just barely. It's been basically even.
Inflation rate came in at 8.3%.
Oh my God. They took my job!
Buddy is crazy as hell. He like, look, yes, it's 8.3, but it was just only 8.2, so it technically barely went up. Anybody can... This is our king. This is the person I'm supposed to fix it for is Jesus. That shit is funny. What's the best crypto to swing trade right now? Great question. Off the top of my head, ApeCoin. ApeCoin is the best crypto to swing trade right now. Next question. Trump, his name was even on the check. Yeah, I still kept my check. His name was on the check. His name, I still got a copy. You still got a copy of your check. Let me know. Press 1 if you still got a copy of your check. Yeah, his name was on them checks, dog. I get Trump 60% because at least I wonder if he was in here, how would he handle it? Because Trump is more understandable about finances and figuring stuff out and delaying it or just not paying people. I don't know. Yeah, Biden didn't know what the hell going on. He said, look, y'all. All right, let me get back to what I was doing. Okay, here's what changed in the Fed. Let's see if it's going to show me on CNBC. They talking about what changed. Come on. Here's 9 minutes ago. No, I need something sooner. All right, let me just shit. All right, I guess I can. Trying to find a way to send it to you guys. So we can see it as a team instead of y'all just hearing a player reading out loud. I think it do this because I have this damn app. That's exactly probably what it is because it's not taking me to the website. CNBC. Watch this. What change? Let's see how good the internet is. Bam. I love the freaking internet. Technology is freaking amazing, dog. Technology here is amazing. Here's what changed in the new Fed statement. Since I'm live, I can't read quick enough and understand exactly what changed. Let's see off the top of my head. I ain't even gonna guess right now. This is a comparison of Wednesday Federal Open Market Committee statement with one issue after the Fed previous policy making on July 27th. Text removed from the July statement in the red with a horizontal line through the middle. Text appearing for the first time in the statement is in red and underlined. Black text appeared in both statements. Recent indicators of points of modest growth in spending and production has softened. Nevertheless, jobs. So they crossed that shit out because that didn't solve. Point of modest growth. Okay, recent indicators, spending and production. Okay, job gains. Should you hire food? Don't this look like an essay that you send in like college or like high school, and they just mark all type of red off? Like even on the government level, they still do this stuff. Should you hire food and energy prices? Yep. Should you phone rate from 2 to that? Man, nothing ain't changed. That's stupid. That was a dumb article. That's dumb. All right, let's see what the alleged smart people is talking about. Let's go to Yahoo Finance. What up, Meet Kevin? What up, though? What up, though?
Housing rental costs are going up. Wage compensation, especially in healthcare, is going up. The service sector is really booming. The slowdown that people talked about is mostly in some of the goods sectors, and the supply chains are really relevant for goods. So if the Fed is surprised yet again, and core inflation is actually continuing to head upward instead of down, we're not done. The Fed's going to have to do further rate hikes next year.
Well, Andrew, just looking out to the November meeting, if you take a look at the dot plot right now showing 10-9 majority in favor of hiking above 4.25% this year, making it seem like 75 basis point hike in November is on the table. It sounds like you think that makes sense then.
I think that the Federal Reserve's responsibility is risk management. Now, economists generally think that what really matters for the economy is the interest rate relative to the level of inflation. So that means if inflation's running at 4.5%, 5%, and workers and their families and small companies are expecting inflation to continue at 5%, then even a 3% or a 4% interest rate is not actually that tight. And this is, again, the mistake the Federal Reserve's been making for the past year, and it looks like they may be making again. I think there's a real risk here that the economy will stagnate for sure, almost certainly, over the next year or two. A combination of high inflation and these global developments, high energy prices and so forth. But we should not be thinking that monetary policy is very tight yet. It isn't. And probably, in my view, there's a very significant chance that it'll need to be tightened very substantially beyond what the Fed
So Buddy is today. Like, man, at this point, I'm willing to put my name on it. Shit is going to be stagnant. The market is not going to grow for the next year or two because it's hard to grow with high inflation. What's y'all thoughts about that? So we got 8 more minutes before the meeting get popping. Let's look at crypto. Let's see if how's crypto reacting to all of this madness. Madness, I tell you. Crypto is in the red. Don't like it. Bam. Come on, I need Bitcoin under 19,000. Come on, baby, need a new bed. Give me Bitcoin under 19,000. Up, there we go. Under 19,000, baby. Come with me. Follow me, baby. Let's go. Good money. Shoot, man, I want to do today. Oh, man, should I get me a whole Bitcoin today? All right, I'm going to take a breather. Ethereum, ETH is in the red last hour, but all of them, Bitcoin is only leading 1%. Polkadot 1%. Matic is down the most in the last hour, day, week. Shit, what's going on with good old Polygon? I haven't read up on what's going on with Polygon. Cosmos, Near, Algorand, shout out to Algorand. Definitely have me an Algorand bag. So crypto ain't doing the worst. It's doing kind of like I predicted it, to be honest, y'all. I see it exactly as what everything's going to do. I think everything is going to recover. Let's see. All right, so you have the Dow, not even down 1%. You got the NASDAQ. They're basically the same right now. It's going to be interesting once Jerome Powell start talking what these numbers are going to do. What these numbers are going to do. So you had that initial drop. Bam, we bounce back up. Drop back down, and we bouncing back up. And exactly what I predicted, man. I think it's going to keep on doing that and go a little sideways. We shall see. See if your boy know his thing. If y'all don't have no free stocks with Moomoo, go ahead and get your free stocks. So, did y'all see Ford Motor Company get whooped on yesterday? Ford took a beating. Look at this. Bam. Drop. It went down crazy. It don't look like a lot, but it is because it's only a $14 share. Ford profits, warning shows truck business is strong. EV can make it better. The auto industry is suffering from supply shortages as Ford sees biggest one-day drop in 10 years. Like, that's how big that drop was, y'all. Phew. Are supply chain concerns just at Ford or all auto companies? That's a great question. Are the challenges temporary or structural? Great question. Are the challenges constrained to supply side? But I think it's all supply because Ford changed their prices on their EV company. So they had the new Ford Mustang EV, the F-150 EV, and they keep on raising the prices because that's why you got to just be investing in Tesla. They're 5 years ahead of everybody else's because they figured this shit out. All these new companies is getting into this range and they just don't understand the cost of these batteries cost so much. The average price to make a Tesla is like $36,000. They have it figured out. That's a lot of money. So it's like you can't sell a low price thing just yet, you know. Yep, 75 it is. John Jackson spoken like a true liberal. Oh, what'd he say? These rate hikes haven't even made the economy yet. They are raising rates too many times. Yeah, it's going to be a bad long-term ripple effect, to be honest. It's definitely going to be a bad ripple effect. Let's see. All right, we got 3 more minutes. We need Papa Powell. Get his ass up. Papa Powell, get ready to tell us what's going on in the hood. Then Cardano. Let's see if I can get a Cardano video real quick. All right, so Cardano's supposed to be having their vessel hard fork upgrade today or tomorrow. It's coming like very, very soon. So this is what you need to know. I wanted to read this live to see what's popping. Cardano vessel upgrade goes live tomorrow. Here's what you need to know. To input, output, the parent organization behind the decentralized blockchain platform, Cardano ADA has outlined changes users can expect on the network after the highly anticipated vessel hard fork scheduled September 22nd. That's tomorrow. Ahead of the upgrade, the company pointed out that the core engineering team involved have carried out an intensive testing and integration efforts to guarantee a positive outcome, which I believe it is. There is multiple ecosystem stakeholders to be considered, ensuring that any upgrade is safe and secure, and that players across the Cardano ecosystem are fully ready and always be paramount to improve smart contract functionality what's next after the Vassal upgrade. After September 22nd, they also noted that there will be a pre-production environment set for September 24th. During the event, new Plutus feature and cost models will be available in pre-production environment before transitioning to the mainnet on September 27th. Good stuff for Cardano. If you're a Cardano holder, put your hands up in the air and wave them like you just don't care. And if you got some Cardano in your wallet, everybody say, oh yeah. I need a Low John Yeah button. Remind me to get the Low John Yeah button. All right, let's see. We're up 45. Jesus, why'd you acting stupid? 45 down in a week, 6%. Down 3% in the month. Down heavy in a year. Great buy-in opportunity for Cardano. Let's go. Look like we're about to get this thing popping, y'all. We are about to get it popping. Let's go. Tesla is a mile 10. Everyone else is at the starting line. Like, for real, though. Like, for real. I definitely agree. Come on, Papa Pile. So, my prediction, he is about to start up. Here we go.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the Consumer Price Index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilik from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2%. Before we would consider that.
Steve.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that, and that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was? Is there a point in time you could see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry. I should know better than to not talk with my microphone. I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now those will evolve over time, and I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today, we've just moved, I think, probably into the very lowest level of what might be restrictive. And certainly in my view and in the view of the committee, there's a ways to go.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored. And as I've said, there's no basis for complacency there. But to the extent that continues to be the case, that should make it easier to restore price stability. And I guess the third thing I would point to that's different this time is that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that, it's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, a rather increase in unemployment, and a soft landing would be very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Just to follow up on one small thing, are vacancies still at the top of your list in terms of understanding the labor market and how much room there is there?
Yes, vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles, where generally the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value in terms of understanding where the labor market is.
Nick.
Nick Timmeros of the Wall Street Journal. You said not too long ago in describing the policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive. And by that I mean meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lags, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know. You look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting and talk about in all of our meetings, and you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Howard.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly, and that's what we're thinking about.
So just as a follow-up to that, I'm wondering about this sort of risk management considerations here. Given there's some discussion now of overdoing it, what's the incentive to continue front-loading right now? Is it lack of progress on inflation seen in the CPI reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby. Thank you. Colby Smith with the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I mean, I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. So that's how we think about it.
Victoria. Hi, Victoria Guida with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now and not something I expect to be considering in the near term. It's just, it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Neil.
Thanks. Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment price stability. But we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together and that we put together on our own, always take all of that, try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it's hard to talk about collaboration in a world where people have very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times, but really we're in very different situations. But I will tell you that our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy. After all, you and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future, and indeed, Treasury rates moved up, so we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient, and does it mean that we might need a possibly higher terminal rate? You're
right, of course. The labor market in particular has been very strong. But there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds, and housing price increases moving down. So we're having an effect on interest-sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening. But you're right. And we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash, so there's a good reason to think that this will continue to be a reasonably strong economy. Now, the data sort of are showing that growth is going to be below trend this year. We think of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that, and that's a good thing because that means the economy will be more resistant to a significant downturn. But of course, we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Mike, thank you.
Thank you, Mr. Chairman. In a world of euphemisms that we live in here with below-trend growth and a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then given that the data you look at is backward-looking and the lags in your policy are forward-looking and you don't know what they are, how will you know, or will you know, if you've gone too far?
So I don't know what the odds are. I think that there's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth, and we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower. That's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this: inflation. What we hear from people when we meet with them is that they really are suffering from inflation, and if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
Well, how will you know, or will you know, if you've gone too far?
It's hard to hypothetically deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
Chris Rugaber.
Thanks. Chris Rugaber. Weaver, Associated Press. I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability. And you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of the rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion, and this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment, and the way we do that is by slowing the economy. Hopefully, we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability, and I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just postponing. The record shows that if you postpone that, the delay is only likely to lead to more pain. So I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs, and we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control, and that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year expansions, and you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow-up, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
Nicole from CNN. Thank you, Chairman Powell. Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset, and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country, where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And, that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
Shelter made up such a large part of this hot CPI report that we saw. Do you think that there is a lag and that we will see that come down in the coming months, or do you think that there's still this imbalance that needs to be addressed?
I think that shelter inflation is going to remain high for some time. We're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think hope for the best, plan for the worst. So I think on shelter inflation, you've just got to assume that it's going to remain pretty high for a while.
Okay, we'll go to Jean for the last question.
Hi, Jean Young with Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restrictive is rates at 4.6% expected? Is that expected to be next year? How restrictive?
So I think if you look, when we get to, let's assume we do get to that level, which I think is likely, what you're going to do is you're going to adjust that for some forward-looking measure of inflation. And, that could be, you pick your measure. It could be, there are all kinds of different things you can pick and you get. But what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term, I think, that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook and ask ourselves whether our policy is in the right place as we go. Thank you very much.
All right, so interesting. Welcome to everybody that's oh no, don't do that, player. Don't do that. Welcome to everybody that is new in here. So It's in those manila folders you have. Yep, so it's in one of those manila folders. My bad. All right, y'all. So first thing first, I want to show you something. This is a video I did midnight. Video a player did midnight. Warning you. So I want y'all to know you're not dealing with somebody that just don't know what the hell they be talking about. Let's watch this real quick. Sony, quick. What's going on? It's your boy Lando Success. I was gonna go in the studio, but family time, and I'm giving you guys 1 minute. So everything that I've been saying in the last few months, the market has been technically doing. I said don't buy anything. Not a financial advisor, just black revenue, y'all some game. Until around right now. I'm like, look, a month ago, y'all wait until the 20th and 21st. Wait until the 20th and 21st because I knew this was going to happen. It was going to raise. Everybody was going to panic. Right now is the time to buy, like, not right now, but like right now, because since everybody and their mama is expecting the market to crash crazy tomorrow, I honestly think it's going to start bouncing back up. The initial news might crash down 200, 250, 300 points at the most, but we possibly might have a rally because the market always will usually do the exact opposite of what everybody expected to do. Since we had the mindset of rates being raised 50 basis points, and also this is why it pays to be a part of my Patreon. I did that at midnight, and I wrote this at 1:54. The time to buy is now. We'll do a video breakdown a little bit later or check the Patreon story. So I broke all of that down on Patreon story. So let's look and see what the market did today. Because nobody on YouTube told you this information. Everybody had nothing but panic vibes, everything going to hell. Panic, panic, panic. They're going to raise it, everything going to hell. What did I say? The initial news is going to drop about 200, 300 points. Then I said it's going to go ahead and rally back up and finish out in the green. You got to be careful who you watch on YouTube. You got to have some receipts. I'm just saying, player know his shit. A player know his shit. All right, so basically with that meeting, Jerome Powell ain't said nothing too special. With my notes, the only different thing he technically said was he added in the job market is going down, the silence I quit movement and people quitting. So he actually acknowledged that. He actually erased a lot of this. He didn't do the blame game too much, blaming the virus, blaming the WAR. So he didn't do that this one. It was really a pointless meeting. He didn't tell us anything. He just, all right, everything's bad. We're going to try to fix it. Simple. People asked some good questions. He didn't answer a lot directly. I don't know how the spammer got in here. I hope y'all blocked her. I tried to block it as much as I could. But yeah, let's Carno on watch list. Yeah. So yeah, man, it's overall market, in my opinion, once again, I don't see us having too much to worry about now. Next month is about to be a crazy explosive month, in my opinion. That's why I was saying I want to buy one Bitcoin under 19,000 right now. And by the end of the video, we have $600. Y'all should have told me to just shoot to J, but I'm still going to do it soon. Now I have a lot of stuff to do. I have to get some, spend some money, sign paperwork and do stuff. So I'm about to do that because it's 3:00. You have any questions, make sure you ask them in the comments. I read all of them. I will address them on different lives or different videos. If you don't have 15 free stock with Moomoo, click the link in the bio. You have to basically sign up do a deposit of $100 to get 5 free stocks. And if you do a deposit of $2,000, you would get 10 free stocks, total of 15. Now they have it where you have to keep the money in there for 60 days because people is running up on the plug, getting a bunch of free stocks and selling them and taking the money out. People always mess up a good thing, but you know, it is what it is. Help you learn more about investing. If you are interested in a Patreon, also have that in the bio. That is $20 a month. But the value I give you, so say for example, you bought yesterday when everybody's panicking the day before, and today you do a quick swing trade and sell, make some money. You know, simple. So hope all is well. Hope you guys completely enjoyed this. Market will be okay. Yes, you have the real estate market is definitely going to be the most fear, the most crashing and all that type of stuff. But outside of that, we'll be all right. Tesla, in my opinion, Tesla looked the strongest, such as buying in and being recession proof. I was thinking of that as I was looking and watching that. I'm like, man, Tesla looked like the best recession proof company because no matter what goes on, Tesla don't fall too much. Tesla just keep on slowly going up and have one day of a low dip. Besides that, you know, I'm Lando Success. I hope all is well. Hope you guys have a fantastic day. If nobody told you you are amazing today, your boy gonna tell you you're amazing today. Let's go.
Oh my God.
Waking up thinking who you, girl.
My job.
Straight, you a voodoo girl. Hide and seek, I don't wanna lose you, girl. 9 in the clip, 5 in the seat, 1 in the head. If they think they're gonna shoot you, girl. Only bullets gonna come from Cupid, girl. And you can ask them niggas if they stupid, girl. Give me the rundown. Let me know how to love now. Let me know how to trust you. Show me nothing else but you. Won't you come back to my crib? Write a chapter in my script. Tell a secret on my lips. Find out just how I like it, yeah. Won't you give me the rundown? Let me know how to love now. Let me know how to trust you. Show me nothing else but you. Won't you come back to my crib? Write a chapter in my script. Tell a secret on my lips. Find out just how I like it, yeah. Girl, you know I rock the boat, baby.